This is Mortgage Masterclass. Your host, Josh McGinnis, is the lender who makes your toughest transactions happen when others walk away. Each episode brings you face-to-face with the industry's finest, the builders, realtors, and professionals who are redefining success in today's challenging market. Whether you're a seasoned industry pro looking to elevate your business or simply passionate about smart home buying and investing strategies, Josh delivers your insider's guide to winning. Together, you're not just closing deals, you're discovering possibilities others miss. This is Mortgage Masterclass. And now, here's your host, Josh McGinnis.
All right, this is Josh McGinnis with the Mortgage Masterclass for the McGinnis team. And I've got with me today, Andy Bond. I'll introduce him in a moment. But the Mortgage Masterclass is just a place for us to have some conversations with realtors, builders, people that are associated with the home buying, the home selling process, and giving advice to both buyers, sellers, and agents involved in the transactions. So let me introduce Andy Bond. I've known Andy, golly, at least a decade plus. Good friends. We've even gone on vacations together with our families. And we have both a personal relationship, we have a business relationship. And he is an amazing realtor who's really expanded beyond just being a realtor and kind of tap other markets that are associated with real estate. And he's really just a phenomenal realtor. So Andy, give us a little bit about like you and what you're doing today and kind of what all you're playing around with in real estate.
Okay, cool. Yeah. So I'm Andy Bond. I am a partner on the Lee team in Keller Williams Realty. And they hired me on December 2010 is when I interviewed with them, and then jumped in, was focused on buyer agency for probably 7 years, and then started getting into leadership, and then eventually pivoted into primarily listings, and then got into construction and, got my general contractor's license and started building as I was building my expertise in marketing. And so now I do, represent prominent builders, and that's a little bit of a focus now is strategic marketing on the new construction side.
That's great.
Yep.
So what got you into the whole new construction side of things? What was that like?
Sure.
How did you make that move? Because I know a lot of realtors would love to get involved
Sure.
in new construction.
Yeah.
I mean,
Well,
who wouldn't?
yeah, to be transparent, it was a little fear driven at first because COVID hit and, I'm a family man. I've got 5 kids. I was like, is the world ending? Is our economy ending? I need to diversify and I need to do it fast. And so in that climate of, at the time, like my Airbnbs, like all of my bookings, I had multiple Airbnbs. They went from 80% occupancy to 0, and so
Overnight.
exactly. And so that's when, Jim, my partner in real estate, got into development, in, the mid 2015, 16. And so I've been rubbing shoulders with it for a while. And I do have a construction background. I mean, worked construction through college, got my engagement ring through that. And so, but at the time I was like, I need to diversify. I need to keep growing as an expert in a different, venue. And so that's when I got, a general contractor's license. And, at the time I partnered with a couple of guys and, started doing a little building. Yep.
So what do you say to other realtors out there that are kind of playing around with the idea of getting into things other than just a buyer's agent or a listing agent and want to play around with whether it's staging? I hear realtors to get involved in staging or property management or in
Sure.
case building. You've gotten in with developers and new construction, but what's your advice to realtors that are thinking of expanding their circle when it comes to their income producing activities?
I would say go for it and experiment, and then just be real about who you are and what you're interested in. I'm a bit of a nerd. I'll be honest. I'm more of a serious dude, and I like, going in depth in different directions. And I like to understand, processes, and I like to be able to teach people about processes. And so new construction made sense because I wanted to understand, what's a footing? you know, how do you lay block work, and I wanted to get into the language of that, but maintain the skills that I was already developing, which is more of the sales angle and then the investment angle, so that I can educate buyers on real estate as an asset that grows in appreciation that you can, offload at a later date and, recoup your equity and then reinvest it even more. And I love understanding processes. And so to realtors, I would say, what do you have a niche for? What are you interested in? Property management would not be something I'm even remotely want to touch with a 10-foot pole, because that's not my thing. But for somebody, it might be, Yeah.
So what skill sets did you bring to the table? Who are the other individuals? What do they bring to the table as far as you creating that builder business? Getting involved in actually building homes on dirt.
Well, I mean, people that had experience on the ground, project managing, I didn't want anything to do with, I don't have time, I don't want to be a part of budgets and hard bids and subcontractors. I want it to be involved on how do you create a product and sell it? What does the buyer pool need in this particular situation? How can we build out the product and sell it at a price that, you can make a profit, but also hear what the buyers are needing, in terms of what their needs are for a home. Yeah.
So you're the one who's kind of picking out the plans. Like, these are the houses that are going to sell well in our market.
Yeah. I think that would be giving me too much credit. I think my gifting is I'm very good at seeing problems and fixing them, advising, and taking a concept and optimizing it, more than like, here's a blank piece of paper and create, design from the ground up. That's not me. But what I can do is, once you have that initial prototype, I can take that and make it into a Ferrari through an aesthetic, sales, market data perspective.
So you recruited somebody that can handle the day-to-day operations of building a house.
Mm-hmm.
And then your job is really to kind of set the vision. I guess, are you working with land acquisition? Are you
on some level
doing that stuff? And then also making decisions with your partners on exactly what house plans to put on the lots, how to price, and what are they going to sell for in the market.
That's right.
And all that. Now, with this aspect of your business, again, there's not a lot of realtors that are doing any kind of building stuff. Mm-hmm. I know it's on a small scale compared to big builders in town. So you're not, one of them. But do you look at this as like for your expenses, or are you looking at the builder side of things as more of your long-term investment strategy? Like, this is a bigger part of your retirement plan, or is it more of your day-to-day living?
Mm-hmm. Okay. So back to the nerd concept. Like, it's my laboratory. I don't know how else to say it, but it's my nutty professor laboratory, because I get to experiment, make mistakes on a very small level, like we're just buying scattered lots. I'm not a big developer, but what it does is we've made tons of mistakes already, in 5 years' time. And it's not something you should enter into lightly. Like, building is not easy. It's like one big fat problem. And then there's problems to solve from conception to the end. But what it does is it's a laboratory for me to take and service my clients, that are doing things on a larger scale, and actually have something to say that has real substance from a product development side, as I'm looking, at how do we market this, and what are the buyers wanting, et cetera, et cetera, et cetera.
How has that made you better at traditional real estate?
I mean, one thing is just it's kind of like an improv pianist, I guess, once you understand all of the the music theory behind it, or a chef who understands good food and like the fundamentals of like a vinaigrette, shallots and garlic, et cetera, et cetera. It's the same thing where the capacity that I can come to a problem and solve it is just so much more robust because here's an example. Like I went and, went on a listing an appointment. Guy's got a great property. This was literally last week, but he created a 3-bedroom, but he separated it with a mother-in-law, which is great. But now the main living house only has 2 bedrooms. So I'm like, well, you need to build another bedroom, like here's where you should build it, and walking him through that process of like, if you want to get this amount of money, based on the market and price per square foot and what an appraiser is going to give you at value for an extra bedroom and what you're not going to get, you're dead in the water unless you add another bedroom. So having the skill set to be able to like, not just be flippant about, oh yeah, just knock this wall out and it's, a load bearing wall. You know what I mean? Like having the ability to actually intelligently advise somebody to do things at that level, I think could be a huge asset.
And then I'm also guessing like, because you're in construction, that when you've got a seller who might want to move a wall that's not load bearing, of course, and create this other bedroom, then you're able to help them do it at a more affordable cost or not waste money on it, kind of help them streamline the process.
Yes. Yeah. I wouldn't, maybe I would rephrase and just say, I'm very confident in how to spend your money to get a return on investment.
So what are some of you said return on investment. So for people that are looking to sell a house and they've got that idea, maybe they're going, in the next 3 to 5 years or 2 years, whatever it is, this year, doesn't really matter. What are some of the upgrades that you see people doing that really don't change the ROI on a house, that they're not recouping that cost or investment on?
Great question. So I am a context guy. So it's hard to make generic statements about that. I would say in general, you're not going to get money back in like your yard. Throwing $30,000 into your yard is not probably, unless it was a very unique situation. Now, I'm not talking about first impression because you need a great first impression, and that does include landscaping. But from an appraisal standpoint, and even what a buyer's going to value, dumping a truckload of money into your backyard is probably not what you want to do. Not to say you're not going to do something if there's a problem, but I've just seen people pour a lot of money into their yard and not get money back.
Yeah. One of the ones that I've seen, I've actually, so I work with buyers.
Yeah.
And so a lot of them are selling a house.
Sure.
And in those conversations, I've had a number of them say, well, I'll get more money for my house because I just replaced the roof. And, my answer, I'm curious what yours is, but my answer to them is usually, well, no, your house just needed a new roof. Like if you had a bad roof, you would have had to knock the price down because you had a bad roof and it needed to be replaced immediately.
That's right.
So now putting a new roof on it just brings it back to market average. You don't add to that just because you have a new roof. What is your opinion on that?
I agree. It's deferred maintenance. So what you're buying is confidence and security from the buyer who's obtaining the home. So your buyer pool will increase because some buyers are less or more risk averse. And then you might buy less negotiations during inspections, but it's not an add-on. It's deferred maintenance that you've brought up to the standard that a buyer would expect.
Yeah. So what's some of the valuable lessons you've learned over your career? Like, and typically I find my valuable lessons come with a certain amount of pain, like the best lessons are the ones that hurt the most.
Oh, for sure.
What are some of your valuable lessons that you've learned where you're like, man, not doing that one again. I'm not going to make that mistake.
Man, where do I begin? Okay. Let's see. Well, I mean, since we're on a lending podcast, so let's just start there. I would say make sure that you're confident in the lenders that you're recommending, not based on personality, but based on who that loan officer is tied to in terms of the company, the underwriting, the appraiser pool. These are questions that I think the general consumers don't ask. So they see a, Rocket Mortgage pop up during the Super Bowl and they're like, oh yeah, that sounds easy. And then they don't realize like that actually could sink you as a buyer and be
How?
the difference.
How could it sink you as a buyer?
Well, number one, if the listing agent has any experience at all, and it's any type of competitive situation, the listing agent's going to talk to their client and be like, guys, this person's using a lender, we call them big box lenders, in our world. So
We do the same.
okay,
We'll just
so
fix that.
yeah, it's like it's a big box lender, and so they're going to have the worst appraiser pools. They're going to overpromise and underdeliver. The loan officers, you're just a number. You're just going to have headaches and problems that could literally cost you the deal, or the house. And so, I had a situation, multiple offers. One person had Rocket Mortgage, and my advice to my lender is like, you should get $20,000 of non-refundable earnest money because we're going to run into problems. And sure enough, we did.
So that seller took that offer
with $20,000 of non-refundable earnest money.
What happened?
The house underappraised significantly, and it shouldn't have, but it was some appraiser that drove in from Atlanta who didn't know the market because, those big box companies, they're negotiating like group package deals with, their appraiser pool, and you know what I mean? So,
you might not actually not know how this works.
Yeah.
But so local lenders, like me, the good ones, there's lots of good ones out there. Okay. They're actually building a relationship with their appraisal panel and they're hand selecting them.
Sure.
And the big boxes, Rocket, Quicken, they can't build a relationship with their appraisal panel. They don't know them. And because they're that big box, their goal is, believe it or not, is not customer service. Like, how do I provide the best service? Their goal is, how do I minimize our costs? And so they negotiate. Actually, there's not even a negotiation. They just tell appraisers, this is what we're willing to pay.
Sure.
Period. And then Rocket has an AMA, which is a third party that operates as a middle guy in the transaction. And that AMA is actually taking some of the fees that the buyers are paying for the appraisal. So that AMA is a profit center for Quicken or Rocket.
Yeah.
And then they're paying the appraisers less money.
Right.
So imagine you're an appraiser and you've got a great reputation. The market loves you. Local lenders, local realtors, they love you. And you're busy because you build business. Are you going to take a lower fee for the same service from Rocket or Quicken? No. So who are they attracting?
Right.
The people that can't get business, can't keep business, that are doing a bad job, that have a lot of times a bad reputation. And so that's where you come up to those appraisal problems.
Yeah. And I will also say, because we're kind of, again, to somebody out there who's just interested in buying and selling. As a buyer, the problem is if you are buying a house and you say, Rocket Mortgage promises to close on this date, and then you can't make it, and the seller has a backup offer with somebody else who's reputable, or they've negotiated, like they've got a signed backup offer, you literally could lose the house because your lender couldn't close on time. And the seller's like, well, if you can't close, I'm sorry, but we're going to let the contract run out and we're going to just take this other offer, which is higher anyway. And we kind of wanted to kick you out of the deal.
So do you know what the average default rate is on buyers that are approved and under contract? So we're talking about, they've ordered an inspection, they've ordered an appraisal. The lender has said, you're good to go. What % of those people are denied in underwriting at that point in the process?
I have no idea. That's your expertise.
9%.
Yeah.
It hovers. Sometimes we're in the eights.
Mhm.
So every now and then there's a year that's an eight, but it's around 8 to 9% nationwide.
Hmm.
And by the way, for those of you watching the McGinnis team, our average is 0% and it's been 0% for almost 10 years. So we've got a stellar reputation on that one. What's one of your crazy stories? Do you have like a buyer or seller story that still to this day is like, it ranks up there as one of the most unusual circumstances?
Hmm. Unusual. Oh, I had a situation with a doctor who was moving to town where we showed up at final walkthrough. The seller hadn't even like begun moving out of the house yet. And so at this point, he was already he had like just started. So like the moving was a big deal because doctors can't just rearrange their schedule like whenever they want to.
Yeah.
Right. So it's really important. And so when we extended after a lot of headache and moving, we extended because the seller hadn't began moving out yet. Well, on that second day, on the second time we extended, they still didn't like, they still weren't moving out of the house. Like all their stuff was still there. And so we just terminated the contract because they couldn't be out of the house. They just weren't out of the house. So it was stressful for everybody. It was crazy. Yeah.
That had to be pretty frustrating too, right at the finish line.
Mhm.
And oh my goodness, what is a part of real estate that you think would surprise the average person? Like, what do you do? What do realtors do on a regular basis that the general public just really has no clue about?
Okay. I would say I'm sure there are a lot of realtors where this isn't the case. Okay. If you are a realtor that is worth what you're asking people to pay you, you have to become competent in a lot of subfields outside of real estate in order to really advise with authority within the context of real estate. You're kind of like a quarterback. Like you need to understand your line. You need to be able to read the defense. And that's understanding investing. Like a good realtor understands cap rates and cash on cash return and long-term appreciation and can calculate that for their client because it's going to really help them make fiscally wise decisions. So you have to have good working knowledge of, inspection, like you have to have a good working knowledge about what a good home looks like, Romex versus knob and tube, and be able to have a good working knowledge of, the sticks and bricks, so to speak. You have to have a good working knowledge of financing. If you're, I think one other thing is like, you can be a fantastic buyer's agent and not have the first clue as a listing agent because it's a whole different set of skill. Like strategically marketing a home and advising someone and creating a compelling, emotionally driven story that is digital and visual, but also verbal. And then the system of calling realtors before and after showings, et cetera, et cetera, et cetera. That's a whole different skill set than a fiduciary on the buyer side. So I think what might surprise somebody is in order to advise somebody at a really high level, you have to have educated yourself and have ongoing education, in insurance and financing and construction. And then your realtor relationships matter. And then what's the latest in terms of cutting edge marketing and strategy and, knowing, Google optimization and geofencing. I mean, you can go so deep in the weeds as a realtor. You just need a working knowledge of a lot of different disciplines in order to do it really well.
So how does somebody out there, because I've literally heard people say, well, a realtor just unlocks a door.
Sure, sure.
I'm sure you've heard that one. or a listing agent, oh, they just posted on the MLS.
Right.
You know, you're talking about there's a lot more that goes into it that people don't see, they're not aware of.
Yeah.
And, a lot of times people look at a realtor and they just see it an expense.
Right.
They don't see the potential benefit.
Sure.
How the proper marketing of a property can actually net you more money,
Right.
even though there's a cost associated with using someone to help you market, price, and sell that property. How would the average buyer or seller out there know if they're dealing with the realtor who's worth it and compared to like a realtor who's not?
Okay. So first of all, there are plenty of realtors that just open doors and just post pictures, like lots and lots and lots of them. Okay. So that's not an assumption out of complete ignorance. It's just an assumption based on not the whole of the industry. You see what I'm saying?
Yeah.
And so what I would say is
What would you put a percentage on that? I'm just curious.
80%.
80%. That
Oh, yeah.
high.
Yeah. Yeah.
So if you just threw a dart at a bunch of realtors, you got about an 80% chance of getting somebody who essentially knows how to open a door, ooh and all over a house, or throw something on the MLS.
Yeah. I mean, it's Pareto's principle. Like 20% of the realtors in Chattanooga do 80% of the business.
Yeah.
So
So how would you go about finding out, like, how do you pick a realtor that's in the top 20% when it comes to knowledge, experience, and the ability to really help you?
I would ask as
transaction.
many. So number one, a realtor that has substance and depth, they're going to ask a lot of intentional questions and really dig into your story in order to advise you based on your goals and needs. And they're also going to go out of their way to present options that you may or may not have been aware of. And they're going to go out of their way to educate you on things that you don't know about.
So that sounds like a lot of the stuff that I try. I work hard to do on the mortgage side, and I'll tell people, like, there's a difference between a loan officer and a mortgage advisor. A loan officer, and there's a lot of really good ones, they know how to give you what you're asking for.
Yep.
And they know how to fill in the boxes on the software.
Sure.
And then they can hit enter and say, this is what the loan looks like. Whereas the mortgage advisor is starting off with, well, wait a second, what is important to you? What matters? What are your financial goals? How are you making the decision on how much to put down? Where would you put the money if you didn't put it down on the house? And going into a much more advisory role on their options. And it sounds like what you're saying is the good realtors are doing the same thing when it comes to real estate. They're understanding, like, what are your motives? What's driving this? Most people selling a house will say, I want to get the most money possible.
Sure.
And then they say, what would you list the house for? And then I think a lot of people just pick a realtor based on that number. Whatever realtor gave me the highest list price is the realtor I'm going to go with.
Which is ludicrous.
Why?
Because you have to make that decision based on reality, which is, it's a combination of looking at the market and what's actually sold and what's comparable and what are the absorption rates? How long is it taking? And because looking in the rear view mirror gives you insight into what's coming. And so you need to look at the market, look at price per square foot, and then look at the marketing strategy and the results of the realtor that you're interviewing and seeing what they've been able to accomplish. And that will give you a clearer picture of what's actually possible than just any realtor can come in and tell you what you want to hear.
Yeah.
But I think great realtors have a firm grasp of reality and they articulate that to the seller and risk even losing the listing. But they also present what they were able to do and have done in light of those realities and how they can push the envelope of the market to get them the highest price possible. And they show them exactly how they've done that and how they will do that with their.
Gotcha. So what are some new technologies that you've been using today that you weren't using in the past to help in your role as a realtor?
I always see technology as a facilitator. It's an enhancer. It's never like a core of, it's never a replacement. And so I would say the fundamentals haven't changed. And what I want to caution buyers for is like, I think they have an illusion that they have all the data now, and they don't.
Why is that?
Here's an example.
Because I would have
So like
thought
if
they
you're a
do.
buyer and you're on Zillow, do you realize that you're only seeing about 65% of what's available in the market?
No,
Yeah.
not, I didn't know that. I
Yeah.
had no clue. I thought everything was on Zillow.
No. You know how many builders that they have land?
Builders don't put anything on Zillow hardly.
There are 100 options that if you have a great agent who has a lot of relationships locally and they've got a lot of builder relationships, we call it shadow inventory. But it's all the stuff that those who are in it all day, every day know about that the general consumer doesn't. But Zillow would have you think that you've got all the data and they've got like, the Zestimates. Well, those are just computer generated algorithms. They pull good comps, bad comps, there's no nuance in that data. So the data's bad, but the buyer thinks that because there's all these free apps and there's technology now that now they can make informed decisions. And that's just the reality. You need someone to educate you. If you want your real estate investment to be a badass financial move where you're ahead of the game and you've got options that other people don't, you want a great realtor.
Yeah. I do find it more than a little surprising, that people have a $500,000 asset that they either want to sell or buy. We'll take a $500,000 property. And then they think, oh, this is really easy. I can do it myself because, again, all I got to do is just list it and be done with it.
Sure.
And, they don't know how to handle or how to structure a property to increase the chances of multiple offers. How to then negotiate multiple offers to get the best and final deal. And, I remember, when I sold my property at the height of the panic, you got 30 offers,
Yeah.
and I remember the top 4 offers scared me to death because I looked at the offer and what they were actually saying. And it was really long inspection periods or people that had never even walked through the property, or I saw the lenders they were using. I was like, we're going to have a problem with that. And I didn't take the highest offer. I took the offer that had, for me, it was a really great offer, but it was the one that I knew was most likely to actually close. Because another thing that I think a lot of sellers don't think about is the cost of messing up. So if you mess up and a property sits on the market for an extra 90 days, there's a cost associated with that. And so sometimes, an offer that's, in my case, it was I think $6,000 less than the highest offer. I think the highest offer never would have come through.
Yeah.
How do you maintain relationships with past clients? What are you doing to nurture that relationship over time after the transaction occurs?
Great question. So I am an ongoing resource for all things real estate. And, if I have a client who needs to redo their yard or put an addition on, or, wants to know what their house is worth now, wants to pull a HELOC on their home and buy another investment property. So I would say we're an ongoing resource as far as real estate education in more of a broad brushstroke standpoint. And we do a couple events a year, and stay in regular touch just to see if there's anything they need. But I would say that's how we stay in relationship. I mean, we educate ourselves. So who I was and who the team was 2 years ago is very different than what we are today, and all the knowledge that we've gained and the new, the new insights, we would say that we are a learning based team. And so we're constantly reading and going to conferences, and then we're learning through experience, and we're all investing. We're all individual investors on the team, and we've got experience with, flips and Airbnb and new construction and surveys and, all kind of things that we can turn around and say, hey, if you have a need or a problem to solve, use us as a resource to help you.
Yeah. Well, I want to really affirm what you just said, because you mentioned short-term rentals. I had a deal that blew up. The buyer was buying a condo for short-term rental, and a realtor told him like that it was good to go. There weren't problems. And then when they checked the condo association said, you can't do that. It's not allowed.
Right.
And so that's why, it pays to have a realtor who understands how to read those documents, how to advise you. Cause, at that point, the buyer had the difficult issue of getting out of the contract, and they had already spent over $1,000 on inspection and appraisal. And we're not counting the time and energy that they put into all of it as well. But they had to ultimately just walk away and lose that money.
That's right.
And so having an agent that knows how to, navigate short-term rental rules and guidelines, restrictions, because those are a big deal these days, really can pay off. Have you ever had to talk a buyer out of a property they wanted to buy?
Property. Yes, definitely. Yeah. I mean, if I see the writing on the wall that this is like, again, this goes back to that initial consult. What are your resources? What are your goals? And really draw out the why and the desire and the goal. Then when we get to a home and it's not lining up with that, we're going to have some fierce conversations about it. And I think this is just a business principle across the board. It's a little bit of an ethical principle too, I think, but like candid conversations always pay off, even if there's a short-term
I agree.
sacrifice and consequence, and they just decide not to buy for a year. Like this life is about relationship, and it's about adding value to people. And sometimes that comes with advising somebody that is actually, it's going to, I think it's an exaggeration to say like hurt me fiscally, but it's something maybe you've poured a lot of time and energy into, and you're not going to get a fiscal reward in the short term, but you're going to get a long-term relationship and reputational reward if you're advising people truly based on their needs and what's best for them.
Yeah. You're talking about a concept that, I preach a lot to my team. You can be transaction based or you can be relationship based.
That's right.
And it's really one of those two. You're going to approach things. How do I add value? How do I make a difference for people? How do I maintain the character that I'm trying to build for myself, my own reputation, or is it just a transaction? I saw Warren Buffett. He busted out this letter that he sends to all of his managers at Berkshire. And the letter has like 2 points to it. And he said, first of all, understand that losing money is not the worst thing that can happen. We will lose money. That's a part of doing business. We can always figure out a way to make more money.
Yep.
So that's not the end of the world. It's not a good thing. We don't like it. We have to address it, but it's not the end of the world. Number two, you can never do anything to damage our reputation. You can't recover from that.
Yeah.
He said, we've spent 47 years building a reputation. We can lose it in 47 seconds. And, making sure you have a realtor who has that same mentality of relationship and reputation matters more than trying to squeeze you into a deal that's not going to make you happy or is not going to meet your long-term needs.
That's right.
Or there something about a property that, oh my goodness. I had a buyer, bought a house near some train tracks, and the realtor's like, oh yeah, they don't have any trains that run here anymore. You don't ever have to worry about it. That was not true.
Yeah.
But the buyers were so pissed off because they were like, I feel like this person lied to me.
Sure.
Just to get a sell. So yeah, congratulations, you got the sell. But now you've got two people that are bad mouthing you to their friends. They're not going to use you again. They're not going to refer you to anybody else. you got to keep that relationship front and center. And the only way to do that is, like you're saying, have candid conversations.
Well, and I think this is a good time to just add something, and that is even great realtors make mistakes,
Oh my
and
goodness.
sometimes big mistakes. And so I do think in that circumstance, because I've been on the other side of that where I've made a mistake or advised in ignorance. I think, how do you own that problem and turn it into, a solution of sorts, and so owning it and being like, hey, listen, I'll help you sell this, get away from the train tracks, like come up with a solution, to try to make it right, and learn from it so that you can advise somebody better in the future.
What's an example of something that, where you feel like, hey, I screwed up in some way, and here's what I did to try to make it right?
Okay. Well, since you mentioned, so I want to just be fully transparent. So like the Airbnb advising thing, there was a season where that got really hairy because things were in flux. Like the city hadn't voted yet, but they were going to vote. And then amendments were made. And so I did have a buyer, and this is years and years ago, go under contract with what we thought was an approved Airbnb, but there was and we did look at the HOA docs, but there was an amendment to the HOA docs that was online on a website. And so we just didn't go deep enough, and weren't thinking about amendments. And so, but
So you requested the docs from the condo association. They
Yeah.
sent them to you, or you may have gotten them from the title company. It was one of those two.
yeah,
And you read it. You're like, oh, we're good. Never thinking, oh, they've amended this, but not included it.
So
in
that
the full
particular community had a website that we didn't check, and I don't want to put it wasn't like the listing. It was not the listing agent's fault. This was our fault, not the listing agent. And so we wound up like paying that client back for certain things that they had to spend money on because it was, we confidently went forward out of ignorance, and so that was just one of those, we owned it. I had to call the agent and humble myself and, get them out of that contract. And we were able to, and get their money back. And we paid recoup, like we basically they incurred liquidated damages for our, so now we approach that very, very differently, but that would be an example of like making a huge mistake and then having to own it. And
yeah. Well, it's also like you're demonstrating the concept of radical accountability.
Mhm.
Are you familiar with that concept?
Is that, yeah.
It's just this, no matter what happens, be extreme in taking ownership of everything that's possible.
Sure.
You could have done different.
Yeah.
Is
that Jocko Willink? I feel like it is.
I think so. I'm not 100% positive.
Yeah.
But I think it is. I think it comes from his book, but just going like, hey, I'm not out there pointing fingers at anybody. I'm taking on the ownership of it. Here's what we did. We thought that was enough. It clearly wasn't.
Mhm.
So here's what we're going to do to make it right and take care of you.
Mhm.
Definitely value the relationship more than the transaction.
100%.
Andy, rapid fire questions.
Okay.
What do you think is the most overrated home feature?
Overrated home feature? So I'm not good at rapid fire questions. I am going to go back to, certain yard features. I think.
Landscaping.
Yeah, I think so.
Okay.
Yeah.
What do you think is the best month to list a property?
Probably March or April.
Best month to buy a property?
December, January.
What's a big red flag when somebody's viewing a property?
Big red flag. A standing water in the finished basement.
What's the most common mistake you see first time home buyers make?
Not thinking through it long term, through the lens of exit strategy.
Oh yeah, that's a good one.
Yeah.
What's a tool you feel like you couldn't really live without?
The statistics on the MLS.
You're a data geek, total data
Yeah.
geek. What would be your advice you would give a new realtor getting into the market?
Don't do it on your own. Learn under like mentorship. Find a good team. That's what I did. I closed 46 transactions my first year running, and that was because I got on a good team and I learned a lot. And now, like thousands of transactions later, that's what makes me good at my craft.
What would be your most memorable home showing experience?
Memorable home showing. Oh, getting attacked by somebody's dog and
Okay, that would be
having to defend my clients between a couch and this dog that was like viciously attacking us,
like literally biting.
like trying to bite me. Yeah.
Oh,
And my client. That's actually happened multiple times.
multiple times.
Yes. I've got lots of crazy animal stories.
Right.
One attack cat, actually.
Oh, that's
I
even worse
can't.
to me. I hate
It was
cats.
like vicious, like doing the whole like swiping with the paw thing. It was creepy, very creepy.
I had a cat in the neighborhood for some reason just beelined it towards me while I was walking my little dog, and it's hissing and making this horrible sound. I'm like, what do I do?
Yeah.
Because I've got like a second and a half to decide.
Right.
The punter in me came out.
Right.
I was yelling. That cat kept running, and when I got close enough, punt. Cat flew across the street. It ran off. Didn't bother us anymore though. So, Andy, I know you got a lot of neat things going on right now with your team.
Mhm.
I understand you're bringing on 2 more buyers agents or new construction agents to be more precise. 2 more new construction agents to handle the growing developments that you have in your listing back pocket and everything. Tell us what would be the best way for people to reach out to you, and is there anybody specifically that you're kind of looking for these days to work with?
Sure. I mean, I'm always looking for people that are learning based. So if you're driven and you're learning based and you're articulate, because real estate is about communication, I'd be interested in talking to you. Yeah.
What's the best way for people to get
My
in touch
cell
with you?
number, 423-902-1322. Text message. Yep.
And we'll see if we can get that put on the description as well.
And then you can go to livechattanooga.com if you just want to like check us out in general. www.livechattanooga.com.
Okay, great. Well, everybody, thank you for attending this Mortgage Masterclass with the McGinnis team. Hope you found some of the insights and feedback and experiences from Andy Bond helpful and beneficial to you. I think the key for me, the key takeaway in this is you are dealing with a very large transaction. Typically a home sale or a home purchase ranks up there with our largest single financial decisions. When you're doing that, make absolutely certain you're dealing with someone who has the experience, the knowledge, the expertise to ensure you're getting exactly what you want now and what will meet your needs later. Don't just work for anybody who happens to have a real estate license. You deserve to have someone who's really going to be your advocate and truly have your best interest at heart, helping you get more of what you want out of that transaction. Thank you for joining us and look forward to talking with you next time. If you want to stay up to date with what we're doing, the educational content that I'm producing related to mortgages and home buying, then follow us online at Josh McGinnis Lending. You can find us on Facebook, Instagram, all those out there.